Hello, friends. So you're once again welcome back to my channel. Today I'm here to give you a quick review of what is transpiring on volatility 75 and what to expect on the markets, and then also I'm going to give you a detailed explanation of what a breaker block is and how to trade breaker blocks as taught by my mentor Michael. Alright, so quickly let's go into the video. But then if you are new to this channel, I would encourage that you first of all subscribe to the channel and then enjoy the benefit that is yet to come on this channel. Alright, so I wish you all the best as you stick to this video. I want you to watch every part of this video and stay blessed. Alright, so let's go. Quickly, anytime you have a market trading in a certain pattern, a typical example is anytime you have a market trading this pattern, a market trades to this pattern and then trades to this pattern and then continues up this way, okay, and then instead of it continuing down, so for instance, if you have a pattern like this, we usually have market forming what we call other blocks inside this area, and the normal is that what we expect is that the market should necessarily trade into the other block and then bounce, continue in the direction of the trade. But if the market doesn't go that way and then it comes straight into the other block and then it breaches the other block, what we usually expect is that market would rather want to trade back into that particular other block that it has breached and then continue its way down. So this is for a bearish scenario, okay. When we have a bearish scenario, this is what it is, okay. So for instance, you have a market trending upwards and then instead of it coming to take liquidity, maybe either liquidity void or fair value gap resting in here, trading into the fair value gap and into the other blocks and continuing up, and then it breaks the low here and sweeps the liquidity resting below this point. What we necessarily expect is that market has broken structure, has swept the liquidity resting below. So what it does is that market goes down and then it trades back into that other block or into that area of liquidity that it has breached, okay. So this area, this particular assumed other block that would have been an order block for markets to have pushed upwards, now tends to be the breaker block, okay. So for instance, if the market, when we are considering a bearish scenario, so if the market is trending this way, what we can see here would necessarily be the last down candle, which would be the last bearish candle before the movement up. So that last bearish candle that is formed before the movement upwards is what is considered as the breaker block, okay. The same is true for when we have price also moving from when the same is true when we have price also moving on the same premise, trading this way, and then price moves downwards. So necessarily we would expect that price should come trade to this particular point. Either there is an order block resting here that price should trade necessarily into and then be bounced off, but rather price breaches and continues upwards, or in this area, sorry, I was explaining from a wrong point. So in this area where, let's say, we have an order block resting in here price doesn't respect it, breaches it and trades upwards, necessarily what we expect is that price has breached this order block. So price would necessarily trade back into that order block. Okay, price will necessarily trade back into that block. Now that block is now considered as the breaker. Then if price trades into that breaker, then we expect the movement up. Now, how do we trade these breakers and make off ends meet from these breakers? You can rely on these breakers as your trade setup. One of the things that I'd have to let you know is that when you are trading this form of setups, you always minimize your risk. Okay, you always minimize your risk. So good traders are people who always minimize their risk and then do not engage in trade that has higher risk. For instance, some people may be taking trades offers them maybe 3 is to sorry, some people may be taking trade that offers them either how do I describe it? Either, for instance, 3 is to 4 or 4 is to. So for instance, you are taking a trade in this area. Okay, sorry, you are taking a trade that has a risk size of let's say you executed the trade somewhere in here and then you are taking a profit here. Some people may take trade that has a risk size of more than twice the expected returns, which is not a good kind of trade setup. But when you are trading trade setups such as these ones, breakers, you have your lots, your risk size minimized, usually to just below a little bit, few pips below the particular price point or the particular candle or price action that you are considering as a breaker. So just some few pips below it gives you the exit point, and then the exit point for taking profit would be above the recent high that was formed before the reversal. Okay, which gives you a good sizable profit to take, instead of just involving in any trade that just people just tell you take this trade at this time, put your lot sizes at this point. Can you imagine you are taking a trade here, your lot size, you are taking profit here, and then you are taking this kind of losses? So this is inversely more like you are risking 5 to get 2, or you are risking 6 to get 2, which is not a good sign of a trade. So one of the things that you do when you are trading this kind of setup, it gives you very good entries and it also gives you minimal risk. Okay, so now let's go to the chart and see how it applies on the chart then. Okay, how do we apply breakers when it comes to trading on the chart? Okay, how do we apply breakers on the chart then? How do we apply breakers? All right. So now, for instance, as I told you earlier, we have a market which is moving in this form of direction, a market moving in this direction, and then it continues up this way, and then it continues down this way, and then it continues up. It breaks the high which was formed here. What do you necessarily expect? So what I said was that expect that price will come back into, for instance, so let me clear the chart and make it more simple. So for instance, you have this particular form of movement here. Okay, where do you necessarily would you expect your order block? Can you see an order block resting inside this area? Yes, beautifully, I can see an order block. Okay, so let me just put some action here so that we can see our order block. Okay, so let me put something here so that we can clearly see our order block. Okay, all right, so this is our order block. Okay, so beautifully, this is our order block. Okay, so necessarily if price was around this area, price traded this into this area and then continued downwards. So this is it. We have this movement from this high all the way down here, and then it continued up towards this point. And then, so necessarily what are you expecting? That when price gets into this order block, what do you want to do? You want to see a reversal down, right? Good. But here is the case. When price got to this level, it didn't have a reversal down, but it continued and it broke. It traded into the order block, and then it raided the order block. So what price necessarily did was the liquidity resting above here, the sell side liquidity resting above here has been taken. Okay, the sell side liquidity resting on top here has been taken. All right, the liquidity resting above here has been taken off. So what is that liquidity I'm talking about? The liquidity here is that the retail mindset says that when price gets here and to get to this level, price will be bounced off. So what they do is that they place their sell orders right on top of this market here. That is called resistance. That when price gets here, price will be resisted. So they place their sell orders here. But watch is when they place their sell orders here, the market reads it and continue trading up. So most of them, they are stopped out, before price retraces again. Now they are confused. Is price now going our direction? Now okay, they begin to sell. When they sell, price reverses. So the stop hands, this is how it works. Okay, that's not what we are talking about today anyway. So price reads it. Then when price reads it, what do we do? So now what I told you is that that particular order block that we're expecting that price should respect, that price has raided. We expect price to trade back into, we expect price to trade back into that order block beautifully. So watch this. Here is an exception scenario where price actually trades slightly a little bit into the order block and even beyond before the rally up. Okay, before the rally up. There are perfect situations. More often on the perfect situation, price shouldn't even trade below that particular bullish candle that we are considering as order block, or the last bullish candle before the rally down. Price shouldn't even trade below it to make it become a perfect breaker block. Okay, now let me wipe the chart. So price reads it and then comes back, and then what happens? We saw this movement up. Now let me give you on the 1 hour time frame so that you can get a very good picture of what's on the 1 hour time frame. All right, beautifully. Let's see what's here. Okay, so look at it. Look at what price did. So price actually considered on the 1 hour time frame. You could see that this is a bearish candle. Okay, this particular candle is a bearish candle. So price considered that all these continuous candles here were considered as the breaker. All this 1, 2, 3 considered as the breaker. So what you see just before this continuous rally up is this bearish candle, which separates these particular candles from the remaining ones. So it means that these continuous bearish candles were the breaker. That price had to quickly trade back into a little bit below the mean threshold of that breaker, and then price rallied up. Okay, let me look for a same situation on a different time frame, on this same 1 hour time frame, for you to see how the breaker actually works. Okay, beautifully, we'll definitely find one here. Now see, we have price rally up, came down, rallied up again, and then down before it formed this movement, and then now price has rallied up to break this level. You see, this is even a good example that I'm showing you now. It's live, so you would have to see it happening live for you to believe it. And tomorrow I'll give you update, and you would see that what I told you happened live. So now if you have this kind of setup, where necessarily do you think the breaker is? Okay, so watch this. We have price move from this point to this point to this point to this particular point, and then we have the rally up. Where necessarily you think price should trade back into? Into the breaker. Into the breaker, beautifully into the breaker. Okay, before we have either a continuation to the upside. All right, but even nice enough, I told you about the equal highs that price was supposed to take, and it happened today. The price has just swept the equal highs. Guys, just keep watching the videos and you will get every single information that you need for your trade setup. Okay, so let me show you what actually transpired on the 4-hour time frame about the equal highs. Okay, so watch this. I told you that price, if you watch, those who watched yesterday's video, I told you that price was going to sweep this high. Price was going to sweep this high, this, and then this equal highs, and then price actually traded, touched the high, reversed, and so this was our entry point. Price traded back into this area, and then what did we see? A rejection back into this point to sweep the high. Okay, so price has actually swept the high, and now I've told you about the breaker, that price is trading back into the 1-hour breaker. Okay, so let's go back to our video. 1 hour, let's go back to our 1-hour time frame. So beautifully you've seen it happening. Okay, let me take off this from the chart. You've seen it happening live. So now which one forms the breaker? So let's consider these two bullish candles. Okay, let's consider these two bullish candles. So I can draw my line from this area all the way into this area, and beautifully I'm expecting price to trade back into this area, where what happens, beautifully you can see that there is even a fair value gap from this point to this particular point. For those of you who don't know fair value gap, go to my channel, you'll find videos on fair value gap. So you could see that there's a fair value gap from this area all the way into this area. So within this area there's a fair value gap, there is a breaker, which gives you more clear and concise entry. You get me? Price has traded into an order block and then has rejected up to this point. So it shows you that this can even be a proportion block. So expect to, so for instance, if you are setting your trade, you can beautifully set your trade within this premise. And where is your stop? So for instance, let me quickly do this for you. Sorry, let me quickly do this for you. Okay, long. So where is your stop? Your stop is just below this breaker. To be on the safer side, you can even extend it a little bit below this particular price point. And then where do you take your profit? Sorry, where do you take your profit? Can this not be more than so for instance, okay, if you want to even make your entry in the mean threshold or in the middle of the trade, this is it, and then you put your stops slightly below this, you are taking your profit on top of this particular price point. This is so nice, a simple an entry. Okay, so you take your entry right in here inside this fair value gap, expecting to take off from here with this small stop. So this is how breakers really work. Okay, this is how breakers work. We are on volatility 75. Okay, we are on volatility 75. So guys, I wish you all the best trading volatility 75. Now let's look at volatility 100, a quick update on what's really also transpired on volatility 100. So that is breakers for you on volatility 75. Okay, so it's part of the review. Although I've given you the review, but I've also given you a little bit of insight of what volatility 70, volatility what's the name, a little bit of update of what is happening on volatility 75, and then in conjunction with explaining what breakers really are. Okay, now let's look at volatility 75 on the daily time frame. Beautifully, we will find something nice here. All right, sorry, we have volatility 100. Okay, sorry. Okay, so on volatility 100, this is it. So we have price move from this point to all the way this point, and then it has descended down to this area. So as I told you yesterday, we're looking for price to as price was closing, I was looking at price closing, and then as price is closing yesterday, I was showing that we'll look at what will happen today. So price actually has descended down and has left a fair value gap right here. Now let's look at it on a smaller time frame, on the 4-hour time frame. I'll find breakers in here and explain to you as well. Okay, I'll find breakers inside this area and give you a bit of explanation to that effect. All right, so beautifully, we have another nice form of breaker. Yesterday, I think I made mention of it, that I was even expecting price to reverse into the breaker, and then that would have been a very nice entry. And today it did, although it didn't get too close to the breaker, but it did something that was quite interesting. All right, so as I said, today what happened on the market was that price traded from this high, came down to this low. Price actually traded up here, took down the highs, resting in here. Okay, resting above this, but hasn't been able to sweep the high in here. And then what did it do? It traded back into this particular area of trade. So now yesterday I told you that from this high to this high, and then price had to break down to this. So there was price move from this high to this high, and then instead of price reversing, price actually traded and breached. Sometimes it's up to you to determine what actually can be classified as a high and a low. Okay, right. Then what did price do? Price traded back into this area. I was expecting that price rather would have traded into this particular area where these two bullish candles are, at least approximately to touch even the wick of this particular candle, but it came just a few pip away from that particular price point, and then it's reversed. Sometimes that's what the market makers they do, you know. So look at it. So market actually traded just a few pip away from, and then the market reversed. So I was expecting price to actually trade into this particular breaker before the reversal up. All right, sometimes the market is moving too sharp. All right, however, I still have that expectation that should price reverse, I'm expecting price to close in on this particular area, so I'm waiting for price, what will happen or what will transpire on tomorrow's chart. If possible, I'm hoping that price should at least close in on this fair value gap resting in here. You know, there's this gap from here to here, and then from this point to this point. Okay, I'm expecting price to close in on this. All right, so that's how to identify breakers. Okay, breakers, that's how to identify and trade breakers. So for instance, if price should retrace into this area, you can take your trade somewhere within this area, put your stops right below this point at a very small stop. And what's your expectation? Your expectation is that price should come back up into this area, and then, you know, for those of you who are new to the market, you should know that the market is not an everyday winning activity. All right, the market is not lottery. This is finance. Okay, the market makers are not always going to make you win. All right, let me show you another nice breaker that was formed inside this area. So look, price moved from this point to this point, and then to this point to this point, and then it shot up here. And what did it do? It broke down to this low, took down all the liquidity resting below this point, and this point. And what did we see? Market had to retrace back into this bearish breaker. Okay, look at this bearish candle here. It retraced back into it, and then what happened? Boom. So what do you take your stop, or take your profit? Take your profit at this point. Don't always be too greedy to always want to take more from the market. Take a little and keep on rinsing the process. It will come back again. For instance, if you had done this, you had waited, price would have come to do the same thing here. You go back, take your profit, you are out of the market. So don't always be greedy. Oh, I want to hold on to my trade before something else happens, and then you see reversal. Okay, so take your profit where it is necessary to take your profit. All right, so guys, this is a little bit about breakers, and then this is a little bit about the update on what is transpiring on volatility 75 and then volatility 100. Okay, so let me look at it on the 1 hour time frame, and then give you a little bit of updates as well with the volatility 100 for those of you who trade volatility 100 pairs. Okay, so you could see that as we are here, price got in here and then swept. There's this fair value gap resting, which was resting inside this area. Okay, small fair value gap which was resting inside this area. And what can we see? Look at what price is doing inside the fair value gap. It's trying not to even open above the fair value gap. Okay, so look at what 1 hour time frame will do here. Should price close above it, then we know that we are heading to, let's look at it on the 15 minutes time frame. Okay, let's look at on the 15 minutes time frame. Look at what price is doing on the 15 minutes time frame. It's so some way. So let's see what happens on the 15 minutes time frame. This is not a good area for me to have taken a trade anyway, but my expectation is always my expectation. So this is on the 15 minutes time frame. Okay, you can still see some liquidity resting below this area. There's this little tiny fair value gap. There's this equal lows resting here. Okay, so it's a good entry. I mean, it's a good place to see. So tomorrow what I'll talk about is mitigation. All right, so you could see price moved here, came here, moved up, came all the way down here, and then this way it couldn't break the high. What do we expect? What are we expecting? It couldn't break the high. Okay, so now let's look at what happens. If price should break below this low, then it means that we have something we call mitigation in this area. Then we're expecting a down pull. All right. Okay, so guys, I don't want to make the video too long. I wish you all the best in your trading, and then I see you tomorrow in my next video. Please do share my videos for others to like and others to subscribe to my channel. Help grow this channel, and there are more good things yet to come for us all. All right, so I wish you all the best. Enjoy the rest of the day.